Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on ospreystrategic.org as well as StockCharts.com. So today I want to cover off a couple of things. We're coming to the end of March and it's been a wild roller coaster, down 20% on the Nasdaq and back up to only down 6%. So it's been quite a wild swing. Anyway, we're going to get into a few things here. So the risk on gathers momentum I'm recording this on Tuesday evening, and the market had clearly been pushing up the last few days. We're right up around the 200-day moving average, moved above it on the S&P 500. We're sitting pretty much right at it on the Nasdaq. So we're going to go through the index review, and then we're going to check in on those quarterly charts just to put some perspective on this whole move. And then I want to cover off some bond yield charts, and I've just got some various ones, but I've got some lines on them that I think is important to understand the implications of all of this yield curve flattening, and we'll go through that. The collapses in the yen are really starting to make me wonder exactly what's going on out there. The yen broke a giant trend line, so we'll cover that off. But literally, as we come back into the range of the prior highs, I'm extremely nervous. So I don't know how to express it any differently. I'm trying to get a feel or understand what's going on. And perhaps it's just a rotation into the Nasdaq market away from commodities, but we'll talk about that as well. If you have interest in the work we're doing on ospreystrategic.org, feel free to head over to the homepage and you can check out all of the things we do there. You can try it for 1 month at just $7, or for $860. You get a feel for over a year, kind of the long-term stuff. And I got some really nice compliments from a former portfolio manager this week that just said he really liked the concise work we do and packaging the big picture in a bundle. So I'm going to give you a sample of that today as we cover off indexes, currencies, and bonds, just to kind of highlight what we do on the website each week to help you stay on top of the markets. So first of all, actually, I'm just going to whip over here. First of all, let's cover off the intraday view. So March 14th was the lows, and we've soared from there. We're up from 41.50 to pretty much 46.50 here, moving up a very quick 500 points. And on the Nasdaq, we were down around 13,000, and we're at 15.2. So that's a strong 20% move back up. It doesn't quite get us to the prior highs, but it's pretty strong. And then this is the daily view. What we can see here is the S&P 500 went through its 200-day moving average 4 or 5 days ago and has literally been pushing higher. And then we're sitting here with a horizontal line kind of right at support resistance, I would say. What we want to make sure of is the market has the strength to go through these prior highs. And I would say the next 50 points puts us right at this prior level, and so that could cause a lot of resistance. So that's one of the things I'm watching for. And you can see that the Nasdaq had underperformed the S&P 500 here for a long period. And since March the 14th, it has started to break that downtrend. When we get to the weekly charts, the big thing that happened was we had dropped below this 40-week moving average, and the S&P 500 is pushing above it. On the Nasdaq, we're right at it. And we just want to keep that in mind. That's an important place on the charts. Again, these are trying to turn up from very oversold levels. And if we can do that and continue to push higher, that's obviously pretty positive. I think the real question I have, this chart setup is quite bearish. And so I want to be careful as we go through these prior highs. So on the point and figure chart, we're broke above the high we set up here in February. And then each of the beginning of the months, January, February, March, we've rolled down. So as we head into April, I want to be aware of that. So just as an example here, let's go to SPY and let's just pick a shorter time frame, maybe 5 months or something like that. And maybe we'll just go with a line chart. And the idea being here, just to clean off all the other stuff. Okay, so what I'd like to point out here is, just as we go, we're going to take this, we're going to add an arrowhead to these trend lines, and you can just see right here was the beginning of the month. Here's the beginning of February. Here's the beginning of March. And so, here we sit coming into the beginning of April. So watching this relatively close to see what happens as we get here. Okay. So when we go look at the quarterly charts, one of the big things that I want to keep investors apprised of is where we are at in the bigger picture. And one of the things that we see, this goes all the way back to 1982, and you can see the PPO Momentum Index is pretty clear here. But we broke out to, pretty much raging highs where we had a reading of 40 on this scale during the year 2000, and that's when the tech stocks were obviously bubbling up, and they came back down. And we started to roll down below this moving average. Now, it's just a 4-period moving average, or 1 year. But I think what is also important is just to realize how much of a push we've had here. This is the second highest reading for the general Nasdaq composite in its 40-year history. So we're pretty extended. Now, what we can see here is this reading is trying to hold right above that 4-month moving average. So nothing to really get concerned about here. I think the bigger thing for me is that momentum is clearly rolling over as the Fed tries to tighten up this market. So that makes it a little bit more important. Now, we saw a downturn right in 1998, kind of like this, and then it turned and went on another 18-month run. So that was the Asian financial crisis, by the way. So that was another deal. When we have these kind of market shakeouts, the real question is, are we at the end or not? I would say one of the things that is very irregular is the number of home traders that we picked up, or day traders. And so when we did that, the volume really got enhanced in the market, and we still have a couple of days left here. But we're probably going to have the second highest column of volume in Nasdaq history. So this is pretty significant. The one thing I would say is you don't get many back-to-back columns of quarterly price movements lower, except in the really big bear markets like 2000 and 2008. Those were kind of some of the biggest ones. So that's one of the things I'm watching for. Now, here's the quarterly. If we go to the Nasdaq quarterly, so that takes it down to the top 100 stocks. We're nowhere near this. Well, that's not the 4-month moving average, is it? We're nowhere near this breaking down significantly. I would say we've got a gentle rollover here. But the volume for the Nasdaq 100, way different than I'll call it day trading volume of the Nasdaq composite, which had a whole bunch of speculative stocks in it. But nonetheless, this is the highest volume in 7 years for one quarter, even more than the COVID breakdown quarter. So this is a significant development. And again, let's just think about what's going on. So that either means there's a heightened level of concern or something is changing dramatically. And what we saw near the market peaks here was high volume coming into it, and then we put in 4 kind of big quarterly drops. It's the combination for me of being up at a high level, starting to roll over, and the extremely high volume starting to show up. The highest volume in 7 or 8 years on this exchange. So it all adds up to me to at least be concerning. And then when we go to the S&P quarterly, again, a little more stable, 1,500 stocks. But this chart goes back to 1924, so 100 years of history. And what we see, just using the PPO, there probably was a big spike here, but we don't have data going back far enough. Anyway, we're at the 4th highest peak in 100 years. And all of those were meaningful stalls in the market for at least a year. 1987, I think we all know the big drop that happened there. And then in the year 2000, that was a pretty significant one. So this chart doesn't make it look very sinister or whatever. We've barely made a blip on this chart with the move we've had, and so far we're only down 2% on the quarter. So again, we were down 15% just a few weeks ago, and it still looks okay. So anyway, the big picture is we're at a high level where I'll call it more worried about a market correction, because once you have this kind of euphoric blow off, it's important to just be aware of where we are in the picture. So obviously I've been a big commodities investor for those that have followed me. And I would just say that we have this trend here where the XOP, the Oil Exploration and Production ETF, basically since the vaccines were announced, took off, and they really outperformed. And then for a couple of months they pulled back, and then the XOP pulled out, started to outperform the Nasdaq again, then dropped, then again, then dropped. And what we started this week with is the XOP starting to underperform again. Now, what I get worried about is we've got a lot of focus on the government's trying to fix the problem with oil. Many of us on the oil side are saying, it's going to take a lot of government policy to fix a shortfall of 2 million barrels a day. That's true, but if it's the overall economy slowing down that the oil stocks are starting to react to, then that changes everything. So I don't know what it is. I'm just saying that right now we've got a conversion here, or a change, where we were in XOP and now QQQ is starting to look like the thing to be in. And maybe that's for 3 months, 6 months. I don't know. That's just, we're just starting to get the signal here. But I do want to briefly cover off some of the currencies, because there's some extreme moves. And anytime you get, major currencies of the world all of a sudden starting to change, at least it's telling us that something more dramatic is going on, and I think it's worthy of discussion. So first of all, the US dollar is sitting up here at a level where it's continued to peak out. This is 2015. And if we look at this chart, just adding another few years to it, what you see on this US dollar, this is a pretty important level where it's really support and resistance over history. And we're sitting right around this 100 level. So do we go higher from here, or do we actually finally stall out and we revert back away from the US dollar? At this point, I don't have an answer for it. And if we just change this from weekly to quarterly, this looks to me like the US dollar wants to bounce off here and start to take off to the upside. You can also see a big dramatic downtrend here. If this is going to start to change, that would be significant. But the other part of the change that would be significant is if all of a sudden we move from the globalization that we have had to all of a sudden internalizing more of our food and our resources and manufacturing or whatever, that could be what is changing this chart. And so I think it's a pretty important time just to be aware. This trend line here sitting on the PPO starting to break. And again, when these trend lines break, it's usually telling us something. So I would just say, that we're at that point, and we're also right around the zero line. So this could be a meaningful difference going forward in the world that we haven't seen before. And then obviously we'd probably draw a trend line, I don't know, something like that. But if we put it down here, we're right on it. If we put it up here on this other peak, maybe something like that. That seems a little less valid. Here at least I've got 4 or 5, 6 points touching. So when I look at this chart, this is telling me to at least be prepared for something dramatically different in the US dollar. And one of the concerns I have when I look at this is that if the US dollar as the world reserve currency is all of a sudden going to start to take off and go higher, and we have some big changes ahead if that's going to happen. So does the dollar stall here and roll back down, or do we break out to the upside now? I just need to get back to where I was inside my other chart list. So what I want to show is when we go down here to the euro, this goes back to 1991 when they kind of created the euro, and then in 2000 is when the euro became cash. I think it was the end of 2001. That pretty much marked a major change. Then we had a huge run for the euro from 85 cents to $1.60, so almost a double. And now we've worked our way back, but look where we are sitting on this line. This is the 20-year uptrend for the euro, and we're sitting right on it. So again, much like if the US dollar was going to reverse, obviously the euro is a big part of the other side of that trade, but that would be meaningful. Now, when we look across here, this is a pretty important level for the euro. Basically between 105 and 110, it continuously gets supported. So is that going to change, or all of a sudden are we going to start to really see the euro break down here? Great question. Or do we do another bounce here and start to head higher? I don't have the answer, but I do know that at the end of this quarter, we're at a pretty interesting place on the chart. So if we just switch this up to quarterly, you know, it looks so much cleaner, but basically we're chopping in a sideways range, and maybe it's not that big a deal. But I still think it looks to me like momentum on a quarterly basis wants to roll over below zero. And to me, that's a very worrying thing. If you're a Eurozone investor, this thing is going to start to drop like a rock. Hopefully that doesn't happen. Okay, the next thing I'm looking for is the British pound. Same thing. This is a big downtrending chart from '07. So 15 years later, we're sitting here, and this chart is at prior support. It didn't really hold. There's a lot of chop in here. I think this was the Brexit votes. We've moved down. We're sitting in this area that we've consolidated in since the decision to have Brexit. Well, with that, we're under this 142 level. Lows are 115. Halfway in the middle is 130. We're sitting pretty much right there. So when we watch here, which way is this chart going to break? Now, the 65-week moving average is sitting here, and it looks like it's rolling over, as you can see on here. As this rolls over, that's a big political change for us, having this Brexit get lower, the euro go lower, the US dollar starting to soar. Again, we don't know if this is over yet, but we do know it's an important place for us to really pay attention, because if things are going to start changing quickly, we're going to see it in the currencies, and the currencies could be telling us to not, the minor things we think are going on around us are actually macro, big picture. These are long trend lines, and we're starting to change the big picture outlook. So when I look for the Japanese yen, here we go back to 1998, 1999. On this particular chart, I've got another one that's got some other data. But what you see here is a horizontal support and resistance line. And look at the absolute bombing out of the yen over the last 4 weeks. This was 87 cents. It's at 80 cents. It's moved, 10% against the US dollar in 4 weeks. Literally collapsing on the chart. And we saw this briefly in 2014, 2015. What was interesting is this is when oil really started to plummet. Well, we're seeing it now on the opposite side here as our oil holds up around $100. Now, maybe oil's about to break lower. I don't think so. But when we look at this 2016 level, we also had a sudden move in here. So it's not like the chart hasn't had it before, but I think the bigger thing to be aware of is this horizontal support going back 20 years. If this is going to start to break lower, something big is changing on the G7 here, and we need to be abundantly clear on what's going on around us, because this is not just a macro change or a short-term change. Now here we go back to 86 and 87 on the yen. And if you look, we have broken this big 35-year uptrend, and the yen has broken below it again. It's at that horizontal support for 20 years. But what if all of a sudden this chart really starts to take off to the downside? What does that imply about Japan? And again, they import a lot of energy and that type of stuff. So I'm definitely wondering what's going on there. Now, those are kind of the biggest ones, so I'll leave it there. But the point I want to make is we aren't out of the woods here yet. There's some big things changing, and the bond market is one of those things as well. So here's the 10-year, 2-year. And again, today we briefly, for a couple of seconds, touched a negative or an inverted yield curve between the 2s and 10s. And if you look in 2019, that didn't result in anything, but then COVID hit. That was a bigger deal. In 07, this inversion started in 06, took 2 years to play out before anything really happened in the market. In 1998, we had the Asian financial crisis, and then the second fall through was in 2000, and then back in 89. This was long after the crash of 87. But what it did do in 89 was the stock market rallied for a few months and then didn't do anything for 2 years. Okay, so that's one example. But we also have the 30-year Treasury yields, and you can see these are all joining together. If I go to the next chart, when the yields kind of collapse all together to the same level, it took a while for things to play out in terms of impacting the stock market. We know 07 was a top, and in 2018 we had a rough fourth quarter as they all started to migrate together. Well, they're migrating together, but we probably still have some time on this particular chart. The 30s minus 10s, this one has some implications as we break these trend lines, but we're back down to a very, very low level. And I'm going to just pull up the next chart. What this shows here is all of these lines kind of mark what's going on with the stock market down below, and I've got the Nikkei, the DAX, and the S&P 500. Maybe you want to do a screenshot of this, but what is important here to me is that a lot of times getting below this 0.2 level was critical, but it was actually on the way back up that some of these gave the bigger signal. So watching to see how this spread adapts now didn't really hold true back in the 80s. It was more in the 90s that we saw this sort of price reaction. But just take the chart and look at it for a little bit and see what you think. There's a lot of talk about the 30-year and the 3-month. I don't really know that, that's kind of the chart that's going to tell us a lot, but I will just say it hasn't gotten anywhere near the drop that we've seen on the others, and so we probably have a little bit more time. Those are some of the bigger issues I see just when I look around. The currency changes, the bond market changes, the stock market is getting up to these big levels, and again, as I mentioned earlier, the big picture on those PPOs starting to roll over, so it makes me a little bit more nervous than I otherwise might be. Anyway, if you'd like to know more information or try the offering at Osprey Strategic, head over there to the homepage and you could scroll down and see what's going on. But again, these are all pretty big issues that we're sitting here not really talking about regularly. I'd say the bond yield is being talked about, but there's some different ways to look at it, and hopefully some of those charts will give you food for thought. But again, I really want to make sure that if we are rotating away from commodities and into, I'll call it Nasdaq stocks for a couple of months or something, we're ready for it, and that might help us make some timely investments here. But we also have a situation where the banks aren't doing very well, and globally the bond market is pretty disrupted, and now it looks like the currencies are as well. So I can't explain how nervous I am about this. It might end up just breaking out, and the S&P makes another 10% here in the second quarter, but it sure doesn't feel that way to me. Okay, I probably think what's best over the next couple of weeks is I want to watch what happens around the beginning of the month and see if this kind of trend that we had established where the market makes a top around the early part of the month and then rolls down. Is that finally broken, and can we get on with a rising market? But stay cautious here. It's not like we're out of the woods, and part of it's the war. But these charts have been changing for a while now, and having things like the yen, which happens to be positioned geographically between Russia and China, that chart looks really desperate. So keep that in mind. Anyway, thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays at 10:30 a.m. Eastern Time. You can also see the recording on StockCharts TV YouTube page. Thanks, everybody. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.